Well, hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. It's a Monday morning, lots of news to digest this week. In fact, today we have the all-important Reliance AGM as well that investors will be watching out for. We'll tell you what to expect from that. We'll also be decoding Jerome Powell's Jackson Hole speech on Friday. And we'll be also getting all your stock-related queries answered by a technical expert on the show. So if you have any queries, send them in to us on our YouTube feed and we will have them addressed. But before we go any further, let's take a look at the top headlines at this hour. Well, Wall Street closes higher on Friday while US futures are also edging up as Fed Chair Jerome Powell's comments at the Jackson Hole summit point to declining inflation and strong economic growth. In fact, Powell reiterates that the Fed will continue with restrictive monetary policy till inflation reaches acceptable levels. Asian markets kickstart the week on a firm footing with China and Hong Kong leading gains in a latest attempt to woo investors to the Chinese markets. Beijing cuts stamp duty on stock trades and vows to slow pace of IPOs. Japanese markets too gain nearly 1% in early trade, while the GIFT Nifty hinting at a positive start for the Indian markets. Reliance Industries will host its keenly awaited annual general meeting this afternoon. IPO timelines for the retail and telecom businesses will be closely tracked, while future strategy for newly listed Jio Financial as well as updates on new energy business are also expected. Market regulator SEBI submits its status report in the Adani Hindenburg case to the Supreme Court. 22 final investigation reports have been submitted, while 2 investigations are underway. The Supreme Court is set to hear the case on the 29th of August. Brightcom Group's chairman and managing director Suresh Reddy and CFO Narayana Raju resigned. The development comes after an interim order from market regulator SEBI last week, which said that both Reddy and Raju should be restrained from holding key managerial position in any listed entity. The company has proposed a transition leadership team to oversee the seamless change in leadership. Well, before we introduce our first guest on the show, let's listen in to what Fed Chairperson Jerome Powell had to say with respect to inflation and future rate trajectory at the Jackson Hole Economic Summit on Friday. Let's listen in to what he had to say.
These uncertainties, both old and new, complicate our task of balancing the risk of tightening monetary policy too much against the risk of tightening too little. Doing too little could allow above target inflation to become entrenched and ultimately require monetary policy to wring more persistent inflation from the economy at a high cost to employment. At upcoming meetings, we will assess our progress based on the totality of the data and the evolving outlook and risks. Based on this assessment, we will proceed carefully as we decide whether to tighten further or instead to hold the policy rate constant and await further data.
Well, let me then get on board our guest for today, Mark Matthews from Bank, Julius Baer, joining in to discuss, what the comments really mean and to decode the impact going forward. Good morning, Mark. Great to have you on the show. Well, Fed wasn't as hawkish as the street was expecting. In fact, he has stuck to the narrative of higher for longer. At the same time, what really, stoked stocks was his choice of words. Like, he said that they will tread cautiously when it comes to future rate hikes. So after this, speech, what do you think will happen in the September meeting? Do you think there's a 50% chance of the Fed actually going in for a pause this time around?
No, I don't think so. And either does the market, by the way. I think the futures market is pricing in a 20% chance of a rate hike in September and then much higher odds in November. I think the futures market's looking for about 50% in November. But we don't think either will have rate hikes. We think the last rate hike already happened in July, and we think it'll stay high until May next year, but then we look for the first cut. So we think the cycle ended this summer, but the Fed doesn't want to come out and say that. They're sticking with a rather stern tone, just in case there is a repeat of inflation. And to remind you, you could look at the 1940s or the 1970s. Those were decades that had high rates of inflation, and they were kind of like a roller coaster. You had an initial big wave and it came down, and then you had a second big wave. So I guess in the off chance that you get a repeat of that, they're staying stern, but we don't think there will be a big increase in inflation. And as I said, we do look for rates to start coming down in May of next year.
All right, expect rates to come down from May next year. But let's talk about the US growth trajectory as well. GDP growth, has been strong. But, banks aren't really out of the woods yet. We saw S&P Global downgrade some of the regional banks. In fact, some of the major banks have also been put on negative watch. And if you look at the US yields, they are at a 16-year high. And we also had US credit rating, witnessing a downgrade from Fitch. So what's your assessment on the US equities here on, given the fact that we've seen a very rocky August pan out? Do you expect September to be as volatile for major indices?
Yes, because historically, September is a volatile month, and it's one of the months of the year which on average is a down month, minus 0.7% on average over the last 100 years or something like that. It's not really until the end of October, beginning of November, that seasonally you start to see a liftoff again in stocks into the end of the year. And of course, the beginning of the year, they tend to do well as well. So we're not in a time of the year when stocks should be going up. And after that 10% rise in June and July, I would have found it more surprising, frankly, if August had continued to be strong. And I don't anticipate September being strong. But I would say that you touched on the GDP growth. And one thing that I think is worth noting is that both Bank of America and JP Morgan Chase track the usage of their deposit and credit cards on a daily basis. And I know that what Chase is saying is that their credit card usage, or I guess card, I should say, because it includes debit cards, is inferring a 0.2% decline in retail sales in the month of August. And so if that's true, I think that'll help take some of the worries away about a resurgence of inflation, because one of the data points that kind of spooked the market recently was the very strong July retail sales. They came out at 0.8% month on month. The market was looking for about half that. So I think that there's room for optimism that we're not going to see a big repeat of inflation, but I also don't see why markets won't continue to soften into September, possibly even October, because that's what they usually do.
All right. I'll come to emerging market basket now. In fact, if you look at China, they have announced a slew of measures to woo investors to the Chinese markets. But A, do you think the risk of deflation still continues despite the kind of measures that they have announced? And secondly, last time I spoke to you, you had mentioned that Indian valuations are attractive, even though we were at record levels. Now we have come off quite a bit. Do you think valuations have become even more attractive? And FII flows here have turned a little volatile. What are your thoughts on where India is headed from here on?
Well, with China, the measures that have been announced are not really enough to turn it around. I think what you're talking about are measures to attract people into their stock market. They cut the stamp duty on equity transactions over the weekend. Something else as well, memory escapes me, but I don't think that either were significant enough to really be material. And the problem in China, I think, is that the way they handled COVID, obviously looking to minimize deaths. So it was a benevolent intention, but the severity of the lockdown and the fact that it lasted so long, I think, has really deeply hurt both business and consumer sentiment. They're kind of suffering from what you'd call a post-traumatic stress disorder. And I don't think the stimulus is really going to bring that back on track. The other thing is that property prices, as I'm sure you know, are falling there. And in China, as in the rest of the world, most people's largest asset is the home they live in. So they have a negative wealth effect because of the falling property prices. And I don't see any of the measures that have been introduced to try to help the property sector as really being helpful enough. So that's China. India can grow into its earnings, and the earnings are strong. We're looking for high teens over the next few years. And so on that basis, I don't think the market is expensive. And it is our preferred market in Asia.
All right, India remains the preferred market in Asia. With that, Mark, thanks a lot for taking our time and joining in this morning and sharing your thoughts with us. It's a pleasure speaking to you as always.
Thank you.
Well, with that, let me also bring on board our technical expert for today, Rajesh Palviya of Axis Securities, joining in this morning. Good morning, Rajesh. We've seen the markets at 2-month lows. Even though the GIFT Nifty is hinting at a positive start for the Indian markets, do you think the trend is on the downside, at least for this week, as we head towards expiry?
Good morning, Nandita. So this is a fifth consecutive week where we have seen that Nifty is in under pressure and sustained selling pressure, especially in the Nifty as well as in the large cap space. So looking at the near-term setup, Nifty is now slipped below to its 50-day as well as 100-day moving average. So looking at the near-term setup, some pressure is likely to be there in the system, and maybe if Nifty not managed to hold 19,200, which is very important and critical support area as of now for the near-term trend, then possibly Nifty may slip further from the current level also, and then we can see a lower level of 19,050, even 19,000 level. So in today's session or in the current week, 19,200 is very important and critical level to watch for. If at all we hold these levels, then some pullback action can be there in the market, and 19,350 or 19,400, which is having major call concentration area. So that levels are likely to act as a supply zone for the near-term trend. The major short covering move will emerge in market only above 19,350. If we cross those levels, then only short covering action will be there ahead of this monthly expiry. For Bank Nifty, almost we are trading near to the crucial support area of 44,000 for the Bank Nifty also. So if we slip below to 44,000 level, then possibly Bank Nifty may also show some more, supply pressure, and then it may go down towards 44,600, 44,500 zone. That is the major put concentration area at the near-term basis. If at all Bank Nifty crosses above 44,400, 500 zone, then we can see some bit of short covering action in Bank Nifty, and possibly Bank Nifty can then show some strength ahead of this monthly expiry. Both indices are now slipped below to 50-day moving average, so some supply pressure is likely to be there, but stock specific action is still there in market, so that one needs to focus at the current juncture.
All right, focusing on the stock-specific action. But of course, the stock of the day today will be Reliance Industries, given the fact that, it will be hosting its 46th AGM. In fact, investors will watch out for a slew of major announcements. The AGM comes just a few days after Jio Financial's listing and Qatar Investment Authority's take buy in Reliance Retail. In fact, investors are eagerly waiting for value to be unlocked in the telecom as well as retail divisions of RIL. Analysts and investors expect to know more about the areas it wishes to venture into as an NBFC. In fact, future strategy for Jio Financial will be awaited. JioFin has only announced a partnership with BlackRock to float a mutual fund company. In fact, while analysts say consumer and merchant lending is inevitable for JFS, many investors also expect the company to go big in the insurance space. And aside of that, more updates on its pan-India 5G rollout plan and whether or not there are any plans for a Jio 5G smartphone is something that the street is keen to know. Of course, we will be getting you live coverage on the AGM 2 p.m. onwards, so don't forget to tune in. But let me come back to Rajesh and talk about the stock. Rajesh, we have a query also coming in from Yagnesh on, his view. He's seeking your views on Reliance Industries on a long-term basis. So looking at the stock, what are the levels you'll be watching out for, and what would you advise investors to do with Reliance on a long-term basis now?
So Nandita, for long term, yes, our view is on the bullish side. Buy and dip should be your strategy. You can buy and accumulate the stock if you get any opportunity in the decline, because overall long term structure for Reliance Industries on the bullish side only. If we analyze on the longer term time frame, stock is consolidating on the yearly chart as well as on the monthly chart in a range of 2,400 to 2,700. This is the range throughout the year where Reliance is consolidating. In this decline, stock is now trading near to its important near-term support area of 2440, 2450. That is very important for the near-term trend. If at all stocks holds these level, then possibly some pullback action can be there in the stock on the higher side. towards 25, 20, 25, 40, which is immediate supply zone on the near-term basis. But if we analyze on the longer-term time frame, one can buy and accumulate if you get any chance on the decline. Your stop loss for long-term basis is around 2300. And on the breakout about 2700, this stock can scale up to the level of 3000, even 3000 plus for the long-term basis. So long-term view is bullish. You can keep your stop loss around 2300. Whatever dips you are getting in the stock in the near term can be used as a buying opportunity.
All right, that's the view on Reliance Industries. Of course, we'll be watching out for the AGM and getting you live coverage at 2 p.m. Don't forget to tune into Money Control for that. But let me also talk about some of the defense names now, Rajesh. They've been flying high. Some of them have provided solutions or, components to Chandrayaan as well. And they've been high flyers in trade. In fact, this morning we have a brokerage view coming in on Morgan Stanley. In fact, from Morgan Stanley on Bharat Electronics. It has an overweight rating on the stock, target price at 154. The stock, mind you, is already at a 52-week high. In fact, it has won orders worth 3,300 crore rupees in July and August till date. And, it has already attained 50% of its FY24 order guidance. It's just been, first 5 months of FY24. So looking at the stock, 154 is what Morgan Stanley has pegged a target on. But would you say the stock is within reach of somewhere around 200 rupees in the coming sessions?
So BL is looking very interesting, and stock is enjoying almost all-time high trajectory. This is the sixth consecutive month where stock is forming higher high-low formation. That clearly indicates that sustained buying action is taking place in the stock, and the theme is also in the flavor of market, and everybody is looking at the defense stock. A lot of buzz is there for most of the stocks. Yes, we do believe that, for the longer term perspective, yes, this stock have potential to move further higher towards 180, 200 zone also in the coming month. So those who are looking for long term perspective, yes, they can buy and accumulate BEL in the decline also. Your stop loss should be around 110, and upside long term target we are projecting towards 180 to 200. For near term setup, stock is consolidating since last 4 weeks. The breakout level on the weekly chart is at around 138, 140 zone. Once stock crosses above 140, then it will resume its uptrend, and then it may head further towards 155, 160 in the near-term basis also. But yes, this stock one can buy and accumulate for long term. We are bullish for long term also.
All right, BL looking good for the long term. But let's take up some viewer queries that are drilling in this morning. Mohit Anand Bhatia wants to know which Adani Group stock is a good buy at the current juncture. We've had news flow that the SEBI has in fact submitted its findings or its investigation report to the Supreme Court. And then, of course, the Supreme Court will be hearing the case on the 29th of this month. But from the Adani Group stocks, if somebody wants to buy at the current juncture, which one is looking more attractive?
See, most of the Adani stocks react in a tandem. If market takes this outcome as a positive, then most of all the Adani stocks will start railing from the current level. But looking at the overall setup, we are bullish on the Adani port. Stock has shown some corrective move in last 3-4 trading session, and stock is now available near to its important support area of 800, 775. So we are, by risk to reward point of view, Adani Port is looking attractive in this corrective move. One can buy Adani Port with stop loss of 775. Once his stock crosses above 840, this stock can do well, and then possibly 880, 890 could be the possible target in the near term. Another stock that we like on the cash segment, that is, Adani Power. If we analyze on the monthly chart, stock managed to view breakout of its falling trend line on the monthly chart, and the stock is holding that breakout very well. So looking at the near-term, short-term setup, we expect that Adani Power can also move up. Your stop loss should be around 310. Once the stock crosses above 345, then possible upside target is towards 380, 390 for Adani Power.
All right. Hope you've taken note of the stocks that Rajesh mentioned. Well, let's move on to the next query then. This one is coming in on Saxoft from Debu K. Now, Saxoft as a stock, I think over the last 5 sessions, it has been under a fair bit of selling pressure. But over the last 1 month or so, it has given decent 7% returns. From the mid-cap IT pack, how does the Saxoft look on the charts now, Rajesh?
So, Nandita, most of the mid-cap IT has done well in the recent past. And looking at the Saxoft setup, yes, stock is enjoying almost all-time high trajectory. Some supply pressure was there at a higher level, but still looking at the longer-term time frame, stock is holding all its important moving averages, and the breakout is already intact on the stock prices. Stock is now trading near to its 20-day moving average, almost trading near to that level. So, one can buy as overall structure is bullish. So your stop loss should be around 305. If stock not breaks below 305, then there is a high possibility. Then again, the stock will start moving up. And once the stock crosses about 350, 355 zone, then next target for the stock towards 400 also possible in the near term to short term. So buy Saxoft with stop loss of 305.
All right. That was the view on Saxoft. Debu K had a query on that. Hope that answers your query. But let's move on to another query on PVR. Hemant has written in, wants to know whether or not at current price PVR should be held on to or sold into. PVR is one stock that has been gaining traction, and we've seen very good revenues coming in on the back of the Independence Day weekend as well, and Street is turning bullish on PVR given the fact that we've had some recent good releases and has done well for most of these multiplex stocks. But at the current juncture, should one hold on to a PVR or it's time to book profits?
Yeah, definitely one should hold the stock as overall structure for near term to short term is on the bullish side. The stock is holding the ground after the rally. Since last 4-5 trading session, the stock is consolidating at higher level, and it's forming a flag kind of formation on the daily chart. Looking at the near term short term setup, 1700 is the important level. Till the stock is holding 1700 level, one can remain on the long side of trade. On the higher side, 1760, 1770 are the immediate hurdle. Once the stock crosses those levels, then next target for the stock on the high side towards 1850 also. So hold your position with stop loss of 1700 as overall structure for the near term short term is on the bullish side.
All right, that's the view then. I hope that answers your query. One last query for today. This one is coming in on Campus Activewear. Now, this stock was down somewhere around 3.5% or thereabouts. But on the charts, how is it looking? Would you expect more upside, or do you think it's in a corrective phase now?
No, stock is still in the corrective phase. A series of lower top, lower bottom formation for Campus. Looking at near-term, short-term setup, stock is struggling to cross. It's a falling trend line on the weekly chart. So until the stock not crosses about 320, 330 level on the weekly closing basis, there would be supply pressure. So our view is to avoid at this current juncture, as structure for Campus is on the bearish side only.
All right, that's the view on Campus Activewear. With that, we are running out of time, so we are done with the query segment for today. But Rajesh, before I let you go, what are the stock recommendations for our viewers this morning?
So first stock is MapMy India. Very strong buying action in the last week, and looking at the overall setup, we expect that this stock can continue furthermore upside towards 1840, 1860 zone. So one can buy MapMy India with stop loss of 1740. Another stock that is from mid-cap IT space, that is Birlasoft. Clear outperformance is there in the stock. And looking at the overall setup for the Birlasoft, we do expect that, furthermore, outperformance is likely to be there in Birlasoft. So one can buy this stock with stop loss of 472. Upside target we are projecting towards 505. And the third stock that we like at current juncture, that is Titan. Stock has shown good traction in last week. And looking at the near-term, short-term setup, we expect that Titan can exhibit further more bullishness, and 3100, 3120 could be the possible target. One can buy with stop loss of 3025.
All right. Birlasoft and Titan, two stock recommendations coming in from Rajesh. With that, Rajesh, thanks a lot for joining in and addressing all of your queries and sharing your stock recommendations with us this morning. Well, with that, we've come to the end of this edition of Morning Trade. From the entire team, thanks a lot for watching. But don't go anywhere, because coming up next is Opening Bell, so stay tuned for that.
How do world leaders view India?
I've long believed that the relationship between the United States and India is will be one of the defining relationships of the 21st century.
The bright spot of the global economy.
The growth rate for India, which is 6.8 in 2022. Let's not forget, this is one of the bright spots in the global economy right now, such a high growth rate.
The potential of India is enormous, and you have now a reformer, a radical reformer, who has the ability to transform it.
On the verge of a big transformation.
इस अमृत काल में हमारे संकल्पों की सिद्धि हमें आजादी के 100 वर्ष तक ले जाएगी.
A magnet for investment.
I'm actually incredibly excited about the future of India. I think India has more promise than any large country in the world.
The world is bullish on India. Money Control is bullish on India. Join the campaign. Tweet to us with hashtag MC Bullish on India.